and welcome to the Control Your Cash podcast. I'm your host, Olivia Kirk.
And I'm co-host, Tim Urich.
Today we're here with Leighton McWilliams. We met Leighton at an event in Arizona. He deals with gold, and we very much appreciate you coming on to share your knowledge with us and a little bit of your story. So welcome, Leighton.
Thanks for having me. It was really great meeting you guys a couple weekends ago, and been looking forward to this ever since I talked to Tim about it. So excited to be here.
So Leighton, I just want to point one thing out here. It says you were born and raised in Wyoming. That's the state of Wyoming?
Correct. Yep. Mountain West state of Wyoming.
Great. So I grew up in a town called Wyoming, Pennsylvania, and your state, the state of Wyoming, was named after the Battle of Wyoming, which occurred in Wyoming, Pennsylvania during Revolutionary War times. So most people who live in the state of Wyoming don't know that little tidbit. So consider yourself.
That is a.
No, go on.
I was just gonna say that's a great fact to start out the episode with. I'm sure I've heard that at one point, but that is refreshing my knowledge. So that is actually very interesting.
Absolutely. So consider yourself educated on your state.
Yeah, absolutely. No, I'm thankful to grow up in Wyoming, and the more that I'm away from Wyoming, the more thankful I am that's where I grew up. You know, more a small town atmosphere, things like that. So I appreciate it more and more as I grow older.
So how did you end up in Arizona? Like, that's quite the transition from the middle of nowhere to the big city of Arizona.
Yeah, that's a good question. I moved down to Phoenix 12 years ago now when I graduated high school, but I was the baby of the family. So I had 3 older siblings, but they're all 10 plus years older than me. So long story short, when I was in kindergarten is when my oldest brother graduated high school. He moved down here to Phoenix, Arizona. So throughout my entire childhood, you know, I'd visit him, come stay with him. So by the time I graduated high school, I was already familiar, comfortable with the city. And it's like anything else, you know, you grow up somewhere and then you graduate high school, you kind of want to go experience life somewhere else. So I made that transition 12 years ago. Arizona is a great place. You know, I'm very connected to the outdoors, and Wyoming has world-class hunting, fishing, you know, exploration. But Arizona, I think, is very underrated too. We got a lot going on here. But yeah, I kind of followed my brother down here, and I have moved back to Wyoming a few times in those last 12 years to help my family out with business and other things like that. So I've gone back and forth, but majority of my last decade has been here in Arizona. So quite the transition, but I think Arizona is probably one of the most underrated states in my opinion.
Yeah, absolutely. You know, Olivia and I have been out there many times for business, and it is a hidden treasure. And one thing that we've noticed is it seems like every time we go out there, there's been more development since the last time we were there. It's growing so quickly.
It really is. And that's exciting for us that have been in Arizona, especially those of us that are operating, you know, business here. It's a lot more opportunity. And I have, you know, like I've only been here for 12 years, but I have experienced the boom in population. My oldest brother moved down here in 1998, so he's really seen a couple, you know, booms come through here and the population continue to grow. But it's been really interesting. And the way that I articulate it is I think people have been voting with their feet lately. You know, Arizona is still a very freedom-minded state, has a lot of great laws, you know, ability for us to protect ourselves as well as a lot of other things. So with everything going on around the United States, the different individual states, you know, passing legislation to affect the livelihood of people, I think Arizona has become somewhat of a bastion of freedom, you know, in the southwest of the U.S. So it has been really interesting, and to see the new incoming population from these other states. A lot of them are great, you know, people that we welcome here, and some other people we clash with. So it's been really interesting, you know, but I kind of chalk it up to people voting with their feet.
Yeah, that certainly makes sense. So, Leighton, you have a background in the gold and silver industry. How did you get started with that? How did you come across and get to this point?
Yeah, so I got, you know, just like anyone else, I got, you know, a unique journey, and it's about 10 years ago when I was like 20 years old is when I went on the kind of path of having an inspiration to look into what's going on with the world and actually start to piece my puzzle together of what I thought my worldview was going to go, was going to be going forward as an adult. And growing up in Wyoming, my parents were entrepreneurs. So, I witnessed them open multiple businesses, get them off the ground, sell them. It's kind of what they did. And so I'd always had a business and finance personal interest. So when I started looking to alternative information, really try to get my idea of what's going on with the world, always been attracted to the finance side, the economic side. And so, I did a lot of research, and long story short, I came to the conclusion that physical gold and silver is actually the fundamental base of all economic activity throughout history. And it's very overlooked. There's a major disconnection between Americans and the idea of gold and silver. So about 10 years ago is when I started my path on connecting with gold and silver. And then about 7 years ago is when I first got my opportunity in the precious metals industry. And so since then, last 7 years, I worked for 3 different companies dealing with physical gold and silver, 3 different brokerages here in the Phoenix area. So I've had the opportunity to kind of bounce around the industry and get a really good inside look at how different businesses operate, how they approach the business, how they advise their clients, things like that. Um, the first place I worked for, very, very respectable, very straightforward. I learned a lot from the gentleman that runs that business. They focused a little bit more on the numismatic or the collector side of coins. So I learned a great deal about the collector numismatic, industry, but I was always more drawn towards bullion, which is what we focus on here at my current company. And it's a little bit of a more straightforward, better way to invest for the average American versus getting into your collector coins as a hobbyist. So learned a great amount the first place I worked at. Went to the second place here in the Phoenix area, and I only stayed there for a couple of weeks because they really did not embody the advisory and the tactics that I stood for. So landed with First National Bullion. That's the company I'm with now, coming up on 5 years ago now. And I stuck with First National Bullion because we really do it the right way. We position our clients in the right product, take the time to educate. So I've been with the current company, First National Bullion, for about coming up on 5 years now. And then for 3 years now, I've been managing the office we have here in North Scottsdale, Arizona. So our company, we have 5 total brick and mortar locations, 3 in the San Diego area, 1 here in Scottsdale that I manage, and then 1 up in Show Low, Arizona. So really where my journey started was educating myself and basically placing a bet on what industry I think was going to provide me a good career as well as become more relevant over time. And I cannot tell you guys how thankful I am that I stuck with this industry, because about 8 years ago, talking to people about gold and silver was a little bit more difficult than it is today. Things weren't as bad as our economy. Inflation hadn't caught up to us yet. So it's kind of like pulling teeth, trying to educate people about the idea of gold and silver, how we can use it, how it can protect us. Nowadays, this past year or so, we've just been on fire. There's so many people reaching out that I talked to years ago, and they say, hey, we finally want to learn, answer our questions. So for me, it wasn't always the easiest journey, especially going between the different places within the industry, but everything worked out in the end. And I really appreciate First National Bullion. It's owned by one gentleman named John Cavuto, and he lives in San Diego. He manages the offices out there. I really appreciate him, though, because he allows me to run the office we have here, manage our clients, advise the way that I know is right. So he trusts myself, my associate Gilbert, to run business based in integrity here. So I couldn't be more thankful where I'm at. And it's been a long ride. It's only been 7 years, but honestly, it feels like a lifetime to me. So
Yeah, it sounds like it's been a lifetime leading up to this point for you, and it sounds like it's really in line with your values and what your beliefs are. So Leighton, tell us why is gold and silver so important, and if you were to talk to someone who was considering getting into gold and silver and investing in it, what would you let them know about doing so?
yeah, absolutely. And I'll say I think that's one of the main reasons that we've really gained a lot of traction here and gained a great reputation within the industry. Not to take too many steps back, but I do got to let you guys know, and for listeners that don't know much about the gold and silver industry, it has a bad reputation for the right reason, and I've experienced this firsthand. Majority of people in our position, precious metals brokers, they aren't really worried about the best interest of the client. They're trying to get you in, trying to sell you whatever product that they can make the highest margin on versus what's actually intelligent for you to be positioned in. So that's one of our main priorities is education first. It's really how we set ourselves apart. But as far as gold and silver is concerned, I really try to keep it as simple as possible, especially in the initial conversations. But the best way I can explain it is physical gold and silver is money. It has been used as money for thousands of years. It's the only financial instrument we've ever had that hasn't lost value throughout that time. And so, really, gold and silver shouldn't be viewed as a quote unquote investment. As in, I tell people, you don't get into gold and silver to get rich, you get into it just to protect the wealth you've already earned. So instead of something to jump into, a speculation, you're going to risk your money, you get a return, it's the exact opposite. So it complements your other portfolio, stock market, real estate, cryptocurrency, if you're into that. And it really is your base foundation, your safe haven of wealth to give yourself a nice foundation to, maybe risk your money in other assets or other investments. So gold and silver is money, always has been money. I think it always will be money. And the reason that it's important to us right now is because the current money system we have is not healthy. Everyone knows inflation's hitting us. And so the best way to view gold and silver is a more secure, private, independent form of wealth for us compared to the US dollar right now.
That's such a great point because the government manipulates the, cost of living and the inflation rate. And, we've been told that inflation is under control. But yet, when we go to the grocery store, or we go to the gas pump, or we go to buy a car or a house, we know that inflation is not under control. We're paying more for goods and services than ever. And the reason is because you can't flood the market or flood the economy with printed dollars and not expect that that's not going to drive up prices on goods and services. You have more dollars chasing the same amount of goods and services. Something has to give, and it's going to drive the prices up. And consequently, as I see it, having a percentage of your wealth in a precious metal like gold or silver helps to protect your wealth from the ravages of inflation.
I agree completely. And especially these past couple of years, one of the biggest concepts that I've been talking to my clients about is, I use my parents as an example all the time because I learned an incredible amount from them. But pretty much, my parents, they're in their late 60s now, but pretty much their entire lifetime, the recipe for financial success was pretty straightforward for Americans. Find a good paying job, have a steady income, maybe invest in real estate, have a stock market portfolio, maybe get some side businesses going to create extra income. That was the recipe for Americans to take advantage of our economy and create wealth for their family. One of the biggest things is, especially with my older clients in that generation, is to explain to them, yes, that was the recipe for success these past decades, but things are changing so quickly right now. Our entire monetary system is kind of turned on its head. So what worked for majority of your life is not really looking so prosperous going forward. And, the money creation is really where it all comes down to. And both Tim and I actually gave a keynote speech at the event we met at, and I went right before Tim, and I had this chart, and it showed the money creation, and I don't know if it'll show up too well on the camera, but I have it right. I'll just, put it up here. But this is a chart of the amount of money that we've created throughout time. It goes all the way back to like 1963. So between, the 1960s and right before COVID, we were between 4 and 6 trillion in our money supply. And then once COVID hit, you can see how much money we printed in that amount of time. So this is the real reason that we're going through inflation right now. There's a million things to be said, but in my opinion, this is the crux of the situation. And so in all reality, if we compare it to the year 2000, we had about 4 trillion in our money supply. Right now we have about 21 trillion. So within the last 24, 25 years, we have increased our money supply 5 times over. And so that's really the main issue that I think is going on right now. And another really great example I can give, like this is a 1 ounce gold eagle here. This is one of, example of many coins and bars we sell, but this is 1 ounce of gold here. And the best example I can give to kind of bring it home for people, gold and silver is money. the value of this gold has held steady for a long, long time, hundreds, even thousands of years. What that means is we can take this gold coin today and go trade it in the community for roughly the same amount of goods as we could have 5, 10, 50, 100, 200 years ago. So the true value of gold has stayed the same. And that's the exact reason it's the ultimate steady form of money that we can rely on. Now, the price of gold has continued to go up, but you have to separate value versus price. The price of gold has gone up not because this buys us more goods or because it's more valuable, but it's because the amount of our money that we use has increased in supply. So it takes exactly what Tim was just explaining. It takes more of that overprinted money to buy this same ounce of gold or to buy that same pound of hamburger at the store. So that's where precious metals really come in and show their strength, is because they are true foundational, real sound money. They kind of are outside of the current manipulated, modern monetary theory system.
Yeah, absolutely. And you think about all of that money being printed, but it's backed by nothing. It's literally it's literally just paper. Whereas with the gold, it actually is able to hold the value because it actually is worth something. It's not just a piece of paper. And I know in Tim's speech he was talking about when we were taking off the gold standard and what that did and how that's progressed since that time. And it's really just bizarre to see how it has moved along.
It's really interesting, and a lot of people, like I had mentioned earlier, is like there's a major disconnection between Americans and the idea of gold and silver. And I think that's why we do really well in our industry, is just focus on education first. Now, we're a volume bullion dealer, so we're not a local coin shop. What that means is, we have a better inventory and a lot better pricing than a lot of your local guys. So we deal with clients of all sizes, which we're fortunate to do that. But there's a major disconnection between the idea of gold and silver, what real value is, and the average American citizen. I think part of that is because, through my entire lifetime, through your guys' entire lifetime, we've never really had to worry about the US dollar. We've never had to think about what real value is. It's always been there for us to rely on. It's always been, the gold standard, for lack of better terms, quote unquote. But one of the biggest things that, is a breakthrough with people when they're learning about gold and silver is it was only 1971 is when we disconnected from the gold standard with the US dollar. So what that means is before 1971, for hundreds of years, every dollar that we printed or other countries around the world printed had to be backed by a certain amount of physical gold that was redeemable. So what that did is it used gold as a common denominator for international trade. So whether the US dollar was worth 5 British pounds or a half a British pound, we could always convert it back into this stuff and know that we have a common denominator. When Nixon took us off of the gold standard, that's when we turned into a fiat currency. So we completely disconnected from this. So we've only been experimenting with this fiat currency for about 50 plus years now. So if you look at if you can imagine a timeline of human history, modern, civilized human history, for majority of the timeline, we're using this to either as money in exchange or to back the money that the certificates we were exchanging. So really the entire timeline, this and this have been money, but really this last 50 years, this little blip on the map of our timeline is when we've been experimenting with this fake money, really. So, and then even up until 1964, all the United States dimes, quarters, and half dollars were 90% silver. So even up into 64, we were using legitimate real silver as money. And today I bought a sack of silver dimes this morning. I paid the gentleman $2.20 US for every one dime he sold to me. So that's a really great example of how we have transitioned within basically one lifetime from using real sound money as money to complete fiat, overprinted money. And it really is shocking. But to me, one of the biggest things I say is, yeah, trust us to give you an education. But I really encourage all my clients, all listeners, to go do your independent research. And that's like literally the best thing I can tell people is I give them a little bit of inspiration to get them kicked off on their own, quest for truth. And, that's really impactful.
So, Leighton, couple things there. I'd like to unpack a few things. Do you know or have an approximate knowledge of what the value of gold was when Nixon took us off the gold standard in 71?
Yeah, it's about $35 per ounce.
And what is it now?
$2,680, I believe. I can get the live price here.
Oh crap.
So, but once again, guys, it's not that gold is any more valuable or less valuable than it was. Gold is the same value. It's the price of gold has gone up, and that's just a direct reflection of the loss of purchasing power in the U.S. dollar. So as we're speaking right now, gold is $2,692, so almost $2,700 right now, compared to $35 when Nixon took us off the gold standard.
So that's over 7,600% increase in the value of gold relative to the value of a dollar, right? I mean, that's really what the comparison is, correct?
Yeah, exactly it. And I have a chart here that shows a lot of financial advisors don't like to look at this, but this is the performance of gold and silver. I'll kind of zoom in on gold, but this shows over the last 20 years, 5 years, 1 year, 6 months, 30 days, and then today what it was up. So even looking at the 12-month return of what is that, 34+%. So really, this to me is gold and silver catching up with the U.S. dollar. They're not always a direct correlation of, okay, we printed 5 trillion today, so gold's going to go up tomorrow exactly this amount. So steadily over time, it just continues to graduate. Now, one thing I have to tell people in caution when looking at this, like if you glance at this as have more of a traditional investor mindset, you say, well, shoot, gold's up 34.5%, silver's up 31% in 1 year. That's an incredible return. We should have bought gold a year ago. We should have bought silver a year ago. It's outperforming most of our stocks, things like that. But I have to kind of calm people down and say, take a step back away from this, because once again, you don't get into gold and silver to get rich. You get into it to protect your wealth. So yes, is it great to have these returns over the past 20 years, 1 year, 6 months, 30 days? Absolutely. But that's really not the way we should view it. It should be more of a storage of wealth, a safe haven of wealth. But that being said, to kind of transition into these other assets that people might have an option with, the stock market especially. Like, I don't claim to be a stock market expert. I don't claim to be a real estate expert. I know gold and silver, and that's the lane that I stick in, and I do some of the best advisory, in my opinion, to my clients within our industry. But that being said, just from more of a basic perspective, if we look, the average American looks and they see stock market all-time high. Inherently, what that should mean to us is that our economy is doing well. But in my opinion, it's exactly the opposite. The stock market isn't high because the economy is doing well, everyone's making money. The stock market is high right now because of the amount of money we printed. A lot of people don't understand this, but majority of the trillions that were printed during COVID, they didn't actually go to Americans. Yeah, we got our stimulus check of $1,300 or whatever it was, but majority of those trillions that were printed went directly into that business class. They went into real estate, they went into stock market to support these different markets. So when I look and I see the stock market at all-time high, I recognize where that money came from. To me, that actually represents instability. So for the average person looking at it, or someone that's not an expert on the economy, they look at the different options of where they can hold their money right now. And a lot of the attractive options really represent instability if you know where that money came from.
Yeah, absolutely. And just to underscore that, let's talk about this. So you had mentioned earlier, Leighton, that I think it was in the year 2000, there was what, like $4 trillion of money in circulation? And how much has been added to that? Or how much are we at now?
So in the year 2000, we had 4 trillion in circulation. Right now we have 21 trillion. So that's a 5 times increase in the last 25 years, basically. And if you remember that chart, it's like between 1960 and 2015, the money supply fluctuated between like 4 and 6 trillion. So for us to add almost 20 trillion within the last 4 years, that is a major, major change in our monetary policy. And that's one of the things that we need to focus on. Like this chart, I'll show you. I'm not trying to be too low tech here, but the top one is money, the money supply. So the year 2000 to 2024, we have a 5 times increase. Now I wrote these down. I went on a podcast 2 days ago, and I had these 4 economic indicators that when I took a deep dive, and I was like, to keep it simple for listeners, what are the 4 economic indicators I could talk about to really try to paint an accurate picture? And so what I have on here is the money supply. I have the U.S. national debt. I have our currency and credit derivatives, and then I have our gross domestic product. So really these top 3 categories have been working against us. And then this bottom category is where our strength is. This is the money that we're creating, our economic output. So if we go over, in the year 2000, our gross domestic product was around 10 trillion. Now we are at around 30 trillion. So yes, our gross domestic product has increased by a factor of three, but if you compare it to those top three categories, it's still not keeping up by any means with the money creation, the US debt, and then the currency and credit derivatives that we have. And so this is the main issue, in my opinion. I'd like to try to keep it as simple as possible. These four main economic indicators are some of the biggest drivers to our economy and the health of our US dollar. So I don't know if you guys can see this, but it's pretty straightforward. So, and the thing that is, to me, what gives me passion to go about this industry based on integrity and educate, get clients in the right, products versus selling them whatever we can make the most money on is the whole idea of money creation. It's really a wealth confiscation, where it's a hidden tax that the government is pulling on us, because they don't call you up, Tim. They don't call me up every year. Hey, Leighton, how much money should we print this year? They don't take a vote on it. They literally create that monetary policy under their own, guise, and that is out of our control as U.S. citizens. But what is most devastating to me is your baby boomers or even older. We have clients in their 70s, 80s that are on a fixed income. They worked hard their entire life. They have $1, $2, $3 million set up aside, which at one time when they were working, that would be more than enough to retire on. But the problem is that $2 million they set aside for the last 50 years, that's $2 million. But what that can buy today compared to what it could buy 10 years ago is really devastating to people, to Americans in general. And so it's really removing our ability to save. It's removing our ability to plan for the future. That's where gold and silver come in with its consistency and stability. But it really is frustrating. A lot of people don't know that inflation is a hidden tax. So it's in my opinion, it's a direct wealth confiscation.
Oh yeah, absolutely. I agree wholeheartedly. Uh, so you said we printed over $20 trillion in the past 4 years.
Yeah, so the official, basically before COVID, we were about $6 trillion in our money supply, and right now we're at 21 trillion. So, that's more like what, 16 trillion, 15, 16 trillion. Since the year 2020, we have printed 80% of all US dollars in circulation. So in the last four and a half, or basically the last 5 years, we have created 80% of the money that has existed for 200 years since the United States has been around. And so one priority I have when talking to people and educating is I really try to avoid being sensational. I believe that education is the new elite level of sales, to where decades past, your most successful salesman, high energy, high emotion, manipulating fear and greed to get that sale. I think that's a way of the past, especially we have our cell phones. We live in the age of information. So literally anything I can say or any other salesperson, any other broker, you could fact check me quickly. So I really try to remove sensation out of the presentation and the education. But that being said, if we've created 80% of the money in circulation the last 4 years, that is a significant currency crisis, and then there's nearly 19 trillion. Now it's 21 trillion. So it's about a 375% jump in 3 years of our money supply. So really, if you get down to the facts and understand, what actually moves the economy and sets up the value of the US dollar, we are really facing something serious. And, I went on a podcast 2 days ago with Kathleen Francis is her name, really great interviewer. She had me on for election day because she wanted to hear, my take on gold and silver and what was going on with the economy and things like that. And I think it's, some good information. So I'll share it here quickly with you guys. I feel like most of us wanted Trump to get in. Most logical Americans think that he was the right choice. To each their own. Even if you don't agree with me, that's completely fine. But my conclusion on her podcast is said, what Trump can do for us, in my opinion, is he can get in the office and he can turn our economy back on. He can get our GDP going again, which we need desperately. He can start, pumping the natural resources again. He can help small business kind of have a resurgence. So the result of Trump getting into the office, he will raise our GDP. He will put more money into our pockets. The problem is a lot of people, I think, place too much faith in Trump's ability to turn our economic situation around, because we have an economic recession right now, a small business, people not making as much money. He can turn that around. He can get our GDP up. But what's critical for people to understand is we are going through a monetary inflation right now. And monetary inflation is a result of when money creation outpaces economic output, which is also your GDP. So yes, we're super unbalanced. We have our money creation, like I was just explaining, we printed way too much. Our money creation is up here. Our GDP is down here. So Trump, he gets in, he makes smart decisions. He can get our GDP going. He can start our economy again. But in my honest opinion, we are too far down the hole of the amount of money we've created that no matter how much he can get our economy going, we still are going to have to deal with this currency crisis. And so I told Kathleen, I was like, listen, I know you have a lot of Trump supporters. I'm a Trump supporter myself. I'm not trying to rain on the parade, but we have to take a serious, sober look at the fundamentals of our economy, what he can do for us, and what he won't be able to help us out with. And that's not just Trump. That's legitimately anyone that we could put in the White House at this point. So, I'm excited he's in. I think, if anything, we'll get a reprieve for 4 years, maybe to prepare for the crash that's going to come after him. Maybe he will fall on the sword and crash our economy, because the bottom line is we are going to have to go through to take care of our debt. We are going to have to divulge all of that debt somehow. We're going to have to go through some sort of a micro crash or a major crash to get on the path forward with an honest money. So I think if Trump really, cares for our citizens, he's going to set us up to go through this as easily as possible. But I think he will crash our economy if he truly cares about it. If he's more concerned about his legacy, I think he will support our economy, get our GDP going for another 4 years, and kind of push that issue down to the next candidate. So I wasn't trying to distract the conversation, but I do think that's kind of a unique take and good food for thought for people out there that are thinking about the political spectrum as well as how it's going to affect our economy.
Yeah, and that's a really good point because when you think about it, printing money accelerates is designed to grow the economy theoretically, right? So it's like you have your foot on the gas pedal when you're printing money, but then at the same time, when you're adding regulation and putting the handcuffs on the economy through legislation and regulation, it's like your foot's on the brake. So now you got your foot on the gas pedal and your foot on the brake, and ultimately the only thing you're not going anywhere, and that's what we've experienced certainly over the past 4 years. But beyond that, what's the most common denominator? What's the thing that we can't get away from? And that is, although we've had our foot on the gas pedal and the brake at the same time, because we had our foot on the gas pedal, we've increased our debt. And we're not, unless we address that issue, we're not going anywhere. That's my take.
I agree completely. And you just nailed it. Like I say, of these four economic indicators I think are most critical, I have U.S. national debt. Since the year 2000, we've gone from a 5 trillion debt to a 35 trillion. So that's 7x on our national debt in 25 years, to where our GDP has only increased threefold. So yeah, our GDP has tripled since the year 2000, but if our national debt has gone up 7 times, like I say, no matter how much of a badass Trump is, however innovative, smart of a businessman he is, in my honest opinion, I don't think we're going to be able to, no matter how much he can fire up our economy, get small business going again, we still have way too much to catch up on, not only the US debt, but also money creation. So those two things combined, I do honestly believe that we are going to have to go through a crash at some point. Now, I've been talking to a lot of smart people over this last week about, their perspectives, their take on things. And as of now, where my conclusion is with the Trump presidency is, honestly, I hope that even though we got to pull the Band-Aid at some point, if he's able to get our economy turned on for another 4 years, in all honesty, what that's going to do for us is it's going to give us another 4 years to prepare for when we do go through that downturn. So to where if, say, the Democrats got elected, I think we would have dealt with that crash a lot sooner than later. So I know it's kind of a unique take, but as of now, that's kind of how I'm viewing it. I'm glad Trump's in there. I mean, outside of the economy, I think that the military strength is one of I just gave myself a thumbs up. But outside of the economy, I think that the military strength is one of the biggest peace of mind things for me, having him in there. How we're more respected around the world and things like that. But within the economy, I still think we're going to have to deal with this divulging of debt at some point. So if he gets in and he turns our oil back on, everything like that, gives us another 4 years to prepare for this rough time ahead, then maybe that's what we need more than anything else right now.
Yeah, and I agree. So let me ask you, what's the best way to prepare for that eventuality of the the ultimate crash that has to occur?
Yeah, that's a good question. if you look throughout history, every fiat currency goes through a life cycle, including the US dollar. And I think we're closer to the end of our fiat life cycle than the beginning. I think we're very close to the end, honestly, with everything going on. But what happens throughout history, like I reference back to the Weimar Republic in Germany at the end of World War One, and it's a great example of what happens. So your fiat currency will survive, it'll be accepted, then it gets to a point where the people start to realize it's not worth anything really, so then you go through a hyperinflation scenario. Throughout history, every time this has happened, the fiat currency crashes, goes through a hyperinflation scenario, and for a short period of time, all economy resets to physical gold and silver. And so exactly what happened in Weimar Republic, they went through the hyperinflation scenario. Businesses stopped taking the Deutschmark or their currency as payment, so people started using this again. But when that happens, the value of gold and silver skyrockets to the point where it actually encourages the few of us that hold it to release it back into the economy, back into the labor market to kickstart things. So what happened in Germany is you could trade a nice house for one of these or about 75 of these. Right now today I said this was about $2,700. So I think this is actually a really good takeaway. I'm not trying to be all over the place, but I do think it's relevant. I tell people is, if we go through a crisis period where the electricity goes out or society breaks down or, there's chaos in the streets, I don't think we're going to get there, but it has happened throughout history in different countries. So if that happens here, I honestly don't know if gold and silver is going to do us very much, provide much utility in that crisis period. Yes, will we be able to take it to the farmer's market and trade for whatever we need? Absolutely. This has always been money, always will be money. But where the real strength of gold and silver is going to come in is once we go through that crisis period, whether that lasts a day, a month, a year, 2 years, once we come back together as a society and start to rebuild, that's where gold and silver are going to serve the most utility for those few of us that actually own it, because it is going to be it's going to rely on us to basically finance the reemergence of the new economy. And I know there's a lot to unpack there, but if you look up the Weimar Republic in Germany, the same thing happened. So we go through the crisis period. Once we come back together, start to rebuild, we need to figure out what we can use as money to get the labor market started again. Right now, maybe 3 to 4% of Americans own the physical metal. So we actually are in very rare company. But once we start to rebuild, it's going to be on the few of us that own this to release it back into the economy to get things kickstarted again. So for that short period of time, those of us that own this, it will be smart for us to trade that for other assets, whether that be real estate or vehicles, whatever you decide you need at that point. There will be a certain period where I believe this will be able to be traded for what is now considered a high value asset. So as far as what we can do to prepare, I'm in the gold and silver business, but I never tell anyone to put all their money into gold and silver. This is just one piece of your preparedness puzzle. Gold and silver provide your financial preparedness, but I'm not in the business, but I talk to people about storable food, storable water, good secure shelter, maybe a property that's more in the remote wilderness that you can go to and kind of just be secluded for a while if you need to. So financially, as far as society is concerned, I think the best thing we can do is take a position in gold and silver because we know this will be reliable and it will hold value regardless of what we're facing. But life in general, I'd say just think about how to set up a life of prosperity through a time that might not be that good for most people. And I'm not trying to be sensational or dramatic, but if you understand the money system, you understand history, we are due for a little bit of a rough transition ahead.
Let me ask you this. When it comes to gold and silver, I know you sell and help people and educate people on physical gold and silver. What would you say the main difference is, if someone has the physical gold and silver compared to the mutual funds of gold and silver and those precious metals?
That's a great question. And I would say one term that everyone should look into is called counterparty risk. One of the single greatest things about physical precious metals is there is zero counterparty risk if you have a piece of gold or silver in your hand. What that means is not a contract, it's not a debt, does not require the other party to perform on their side. This is literally unencumbered wealth in your hand. And so it's the ultimate secure form of private money. When you get into investing in your GLD, SLV, the miners, basically all the paper trade of gold and silver, the idea is you're investing in this, but what you're doing is you're adding a bunch of counterparty risk on top of that. And so to me, if I have a little bit of a stock market portfolio and I own gold and silver miners, because in the right conditions they can increase in value a little bit more. But I view those paper investments in gold and silver more as my speculation, to where I view the physical asset, my physical possession of it, as my safe haven, as my storage of wealth. And so I would say counterparty risk is the biggest difference between buying paper contracts or stocks or ETFs versus the actual physical.
Awesome. And Leighton, do you have your own podcast? Do you talk about this stuff on your podcast too?
Yeah, we do. So, my associate Gilbert Walter, we are lifelong friends. I actually met him in first grade, so we go way back. But a couple years ago, I hired him to run the showroom in our office. We got really busy, so I was like, I need to get someone in here that I know is great with people, but also that I can trust to be around the amount of metal and the amount of cash we have here. So, the last 2 years, Gilbert and I have been working together here in the office, and this year earlier, we started a podcast. It's called Precious Metals Podcast, and we're working with Salem Media to produce the podcast. And they have a lot of different radio stations, more of conservative Christian based organizations. So I'm glad to work with them, and they've helped us out on the technology side and all of that. But yeah, Gil and I came to the conclusion that because we focus on education, we have really incredible, impactful conversations with clients every single day in the office. And so we're like, you know what, we need to figure out a way to take these great conversations, this great insight, and try to spread it for everyone to hear it. So we started a podcast, and we actually launched a website. It's called preciousmetalspodcast.com. So anyone can go check that out. We haven't published it so far. We have 4 episodes under our belt. I haven't released the first episode yet, but I did build out our website. You can go to our website, and you can even request information if you want to get in contact with me or Gilbert, learn more about gold and silver. You can send us an email. So, for those listening along at home, you can write down preciousmetalspodcast.com, or our email is info@preciousmetalspodcast.com. So that's the best way to get a hold of Gil and I. If you have any questions about gold and silver, if you want to learn about the process of how we can help you invest or take possession, etc., that's the best way to reach out. But yeah, we did start a podcast. But business has increased so much for us these past couple months that we don't have any extra time to commit to anything. I've had, I think, 2 days off in the last 36 days, including events and things like that. So I'm not complaining, but it's kind of funny. I made a comment to my friend. I said, listen, I'm going on 2 podcasts this week, and neither of them are our own podcast, so we got to figure out a way to commit the time, or, find the extra time. But it is up and running, and hopefully within the next month, I'll have our first 4 episodes published. So, people can kind of check in with us on preciousmetalspodcast.com, reach out to us there. And it's really good information, just kind of like the conversation we're having right now is just, introducing gold and silver, and really expressing the importance and sharing our passion with it.
Yeah, and I just want to make a point here so that we could have our editor insert this into our into this episode. So to be clear, counterparty risk is the risk that a financial contract's other party will not fulfill its obligation, right?
Yeah, that's a lot of counterparty risk, but also it could apply to, say, you buy shares or stock in a gold or silver mine, a mining company. You buy shares in that mine, but the performance of that stock not only depends on the performance of physical gold and silver, but also depends on the management of that mine, whether they're able to pull as much gold and silver out of the ground as they projected, things like that. So literally, counterparty risk is just adding additional factors on top of the base asset that you're investing in. And even the US dollar, I got my wallet somewhere, but if I have a US dollar in my hand, yes, technically I just gave myself another thumbs up. That is a $1 US, and we can go trade it, at the grocery store for whatever. But that is counterparty risk, because that is a debt note. That's a note of debt. Gold and silver are unencumbered physical wealth. So that counterparty risk is really one of the biggest takeaways. But yeah, you nailed it.
Okay, do you want to wrap it up, Liv?
All right, awesome. Yeah, Ellie, and do you need to go anywhere else, or you feel good?
No, I mean, I'd be happy to come on again, and I'm doing good on time here, and there's a lot to unpack, but I think, just educating yourself first, and we offer that as a free service, and just learning about, physical gold and silver, and I don't know. I closed my podcast the other day. I kind of gave people a word of encouragement. I said, don't be overwhelmed with the election or with our economy or how bad things are getting. Americans, we still have some of the most resilient entrepreneurial spirits out there. So I think we will get through what we're facing, but we got to make the right decision. And right now, less than 5% Americans own physical gold and silver. I think as we go through this economic transition these next 5 to 10 years, pretty much every American at some point is going to want to learn about gold and silver or figure out a way that they can actually take some possession of it. Because as we go forward with our debt crisis, our monetary crisis, all these other asset classes are going to start to show their cracks more and more in their instability, to where, in my opinion, physical gold and silver are going to be one of the only asset classes that holds water through what we're facing. So don't ever hesitate to reach out to me. For those listening, send me an email, info@preciousmetals.podcast. And for this short amount I shared today, I tried to keep it simple and give a good introduction, but if you get me going, I can talk for hours and hours and hours about this stuff. But that's another thing that sets me and our team apart, is we are in this industry because we actually have a passion for educating, a belief in gold and silver, and a true belief that this can be used to protect our financial side. So a lot of brokers out there just, want to make the money that comes along with the gold and silver business and just want to sell you what is most profitable for them. But I promise everyone listening, that's not the experience you get with us.
Absolutely. Thank you, Leighton, so much for joining us today. It's been a pleasure. It's very educational. This 47 minutes went so fast.
I agree.
So we'd be happy to have you back.
Maybe when we do have you back, Leighton, we could have like a second episode. We could talk about silver, because we haven't really touched on silver today.
There's a lot to unpack there. Yeah, invite me back soon. I'm open to coming on your show anytime. And breaking up the information probably would be, because I have the tendency to overload people with information. So yeah, next episode, we want to talk about silver specifically. There's a lot to unpack there and a lot of great opportunities. Both gold and silver can be used to privately exit the financial system, get away from the dollar, protect our wealth. Silver, incredible upside potential right now compared to gold. So we should talk about that soon.
Well, let's do that. Why don't you jump on our calendar? We'll send you an email, and then you can get on my schedule, and that will allow you to pick a time. Let's say sometime between, I'm thinking like the week, if you're available, Monday, Tuesday, or Wednesday of Thanksgiving week, or Friday even. Yeah.
That should work fine.
Okay. All right. Awesome. Let me officially close this out. You're getting into conversation here. Okay. So Leighton, it's been great having you. We'll certainly have you back soon to talk more about silver, and we look forward to that conversation, as I'm sure our listeners look forward to hearing more. It's been great speaking with you today, and we appreciate you taking the time.
Thank you guys so much. Really appreciate the opportunity.
It was our pleasure. Thank you.